Double entry bookkeeping system. Is it hard? No, 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 no. It's just a game of debit and credit. So, without wasting time, so day to day transactions are recorded using double entry bookkeeping system. It involves dual effect to each transaction. What does it mean? It means that in any business, for all activities, we are posting the transactions, we are posting the entries in the journal entry, right? And each entry must have dual effect. Dual effect means double effect. How it can be dual affected? It will be affected with the debit effect and the credit effect. Like, let's suppose if the business has purchased markers to resale, there must be transaction that will be posted in the bookkeeping system, like in the purchase account, right? So as the markers has been purchased, so what we get actually, the the company will get the markers, right? The company paid cash for that. So something will come in and something will goes out. That is actually dual effect. Effect means something will come in and something will goes out of the business. So each transaction will be shown in two effects. Something will be debited and something will be credited. So debit and credit. Then the transaction will be completed. Let's go to the next slide. To understand the bookkeeping system, we have to first watch that how many accounts are there. So there are 5 important accounts that we have to study and that we have to understand clearly to know about the dual effects of bookkeeping system. We have assets, then expense, then liability, then revenue or income, and the last capital or equity. Assets and expenses. The first two basic accounts are assets and expenses. Now, what are actually assets? Assets are resources owned by the entity. As we have done before, what are assets? Assets are something that the company owned, that the owner owned. These are the resources that the company have to use in the business. They are the owner of those things. That can be cash, that can be property, that can be the stock, okay, that can be inventory. So these are the assets actually. Now, the second thing, what are expenses? Costs incurred by the entity to run any kind of business. There are certain expenses that the company have to bear, okay, and those will be counted in expense account. Now we will check what is actually the nature of these two important accounts. Now, to understand the nature of the asset, you have to just focus here. Here we have first assets, right? Just look at this picture clearly. Assets. Actually, whenever the assets will increase, when the assets will increase, they will be debited. Increase means when the company purchase something, Like as I told you in the last example, that the company purchased the markers, right? Markers of furniture or any machinery or whatever. When the company purchases something, it will come into the business. When something is coming into the business, when the asset is increasing, that is actually our asset. So when the asset is increasing, it means it will be debited. And on the other hand, when the asset will be decreases, that will be credited actually. How? If the company owner decided to sell any of the asset, for example the land, for example the machinery, or for example the markers that we purchased, okay, when we will sell those markers, of course those markers are now going out of the business. There will be less markers in the business now as we are selling them. So when the markers are going out or any other asset is going out, it means the asset is decreasing. So when the asset will decrease, then the debit will be credited. Similarly, on the other hand, we have expenses account. When the expense will increase, it will be also debited. Again, when the expense account will increase, it will be debited. So, in both cases of assets and expenses, when they will increase, they will be debited, and when they will decrease, they will be credited. Right? Now, we have done two of the accounts, assets and expenses. Now we have the next accounts, and those are the three of the accounts: liability, income, and capital. Let's check them out one by one. So, what is liability? Liability basically the obligations or debts owed to the owner. Basically, liability is they are the obligations that the owner or the business has to pay to someone. That are the liabilities. For example, when the company purchased the markers, they have to pay for those markers, right? And that amount, for that amount, they are liable. That is actually their liability, right? Second, the second account, that is income account, income or revenue, both are same things. So what about the income account? Money received for work or investment. What is the purpose of any business? Of course the purpose of the business will be to earn, to get the income, to generate the revenue, right? So when the company or the business, they get the profit, they get something from the business, that is actually their income or their revenue. The third account, that is basically the capital account. Capital, the capital or equity, both are same things. So what is actually capital or equity? Financial assets for wealth generation. These are basically the assets of the company. Like the owner has invested something in the business, that can be cash, that can be in the form of any machinery, in the form of land. Investment from the side of owner, that is actually the capital or the equity. The purpose of that is to generate the wealth, to get the income and revenue. So here are the three accounts: liability, income, and capital. Now we will check that what is the nature of these three accounts. We have to just remember one rule. And what's that? We have to remember that when liability or income or capital, when they will decrease, when they will decrease, they will be debited. It's opposite to the first two accounts. If you remember the first two accounts, assets, expenses, when they increase, they debit it. But here, what we have, when the liability, income, or capital, when they will decrease, they will be debited. And on the other hand, when liability, income, or capital, when they will increase, they will be credited. So just you have to remember these rules for all five accounts. So what were the five accounts? Five accounts कौन से थे? Assets, expenses, liability, इनकम और रेवेन्यू, कैपिटल और इक्विटी. सो जैसे ही एसेट्स और एक्सपेंसेस इंक्रीज होते हैं हम उन्हें डेबिट करते हैं, और जैसे एसेट्स और एक्सपेंसेस डिक्रीज होते हैं हम उन्हें क्रेडिट करते हैं. और इसी तरह जैसे लायबिलिटी, इनकम और कैपिटल अकाउंट्स जैसे ही ये डिक्रीज होते हैं हम इन्हें डेबिट करते हैं, और जैसे ही ये तीनों इंक्रीज होते हैं हम उन्हें credit करते हैं. So if you understand and remember the nature of these five accounts, you can easily post the transactions in bookkeeping system, the dual entry system, that is about debit and credit. Hope the lesson is clear to you. If you understand it, please like, comment, and share the lesson with the others. Peace.